want to say welcome to all the students who are coming in. Hey, Britt. Welcome to all the students who are coming in. This is the Sales and Trading panel, and we have 5 lovely panelists who are ready to share their experiences with all of y'all. And we are, we'll be showing a slide deck, but that's going to be coming a little later. So if y'all don't mind, why don't we start it off with introductions? Britt, why don't you kick us off?
Sure. Hi, everyone. My name is Britt Brown, she, her, hers pronouns. I am a former O4U student as well as a mentor. I currently work at Wells Fargo in sales and trading, where I am a mortgage-backed securities trader, and I am based in Charlotte, North Carolina. And I graduated from the University of Pennsylvania in 2017.
Hi guys, I'll go next. Laura Hayward, pronouns she, her, hers. I am, as you can tell, a Brit in America. I work for Bank of America in our prime brokerage division, and I'm a director of the firm. I've previously worked at Morgan Stanley, and I moved over to the US 3 years ago. I work closely with hedge funds, and the role is largely financing oriented. And I'm a lesbian.
Great. Hey, everyone. So sorry about the delay.
Hey, Kevin, we're just in the middle of introductions, but I'll hop off now that you're here. Okay.
Good to interrupt. All right.
Hey, everyone. I'll jump in here next. My name's Erin McCulloch. I work at Morgan Stanley as an executive director in the fixed income division within foreign exchange. I've been at Morgan Stanley for 13 years. I started the firm in investment banking, and then after 3 years in the analyst program, switched into sales and trading, where I've been ever since.
I can go next. I'm Kaylee. I graduated last year from NYU, actually. So I'm a current analyst in the structured equity financing division. I currently work at JP Morgan. I'm originally from Singapore. She, her, herself pronouns, and I identify as transgender.
Hello, everyone. My name is Soma Moussa. I work at Goldman Sachs and I'm a vice president there. I manage a team that handles all Goldman's income as it relates to sales and trading for futures specifically. And then I have been with the firm for around 6 years. I started with the firm in their actually investment management division. And then 2 years later, I moved into this role. And I go, my pronouns are she, her, hers, and I identify as pansexual.
So that's all the intros, Kevin, if you want to get the slide deck going.
Great. Thank you, Britt, for getting started, and thank you, everyone, for joining. My name is Kevin Sokol, he, him, his. I'm going to stay quiet and let Britt take over, but I will be sharing the screen in a moment. All right. Good to go.
Okay, awesome. We can go to the next slide. I just want to give a basic overview of what sales and trading is. And then we really want to devote most of the session to questions, because as you can see from the panelists today, there are a variety of different jobs within different sectors that all get this machine to run as efficiently as we can get it to run. When it comes to markets. So please, if you have any questions, please put them in the chat and we will try and answer them along with some of the planned questions I have. So what is sales and trading? Right, you probably, whether you've heard of investment banking or you've had any presentations on investment banking, right? There's a corporation, say it's Apple or Google, right? And they're seeking to gain capital, right? For whatever reason, to build something new within the firm, to actually build up the firm, whatever it is. And you can do that two ways, right? You can, go in and tap the debt market, or you can actually put out shares of your company, right? So majority of the markets that we all work within are stocks, bonds, derivative products, structured products, and there's more that we can discuss. But those are pretty much like the basics. And so, right, to do that for a company, they'll go to an investment banker and they'll say, hey, this is how I want to maybe maximize my portfolio, or adjust my portfolio, or how I want to enhance my company, right? And so they'll issue equities or debt. And then what they'll do is, through a syndication process, they will then sell that into the market. And so the market is made up of entities, right, that the company's looking to raise capital. And then there are also entities like money managers, banks, insurance companies, right, that are looking to invest and looking to maximize their profits. So they buy and sell those securities for profit. And then personally for me, and for a lot of us in this session, we sit in the middle and we either make sure that all these processes go exactly the way they're supposed to be, or we are trading or selling these products to a variety of clients, whether they're money manager, bank, insurance company, et cetera. So the real role of sales and trading is to facilitate the efficient transfer of all that capital throughout these various different financial markets. We can go to the next slide, Kevin. So how do we do that? I would say within our market, right, there are four main structures. And the first one that I want to hit is actually the one that allows the machine to run, and that's execution and operations. If you do not have a back office, a middle office, business managers that are ensuring that all these trades are flowing, and that clients are being allocated the correct amount that they should be allocated, et cetera, there's no way this market would be able to function. So execution operations is there to ensure that the firm and the markets are operating efficiently and effectively. And there are various ways to do that, and various ways to be active in that role. Then there's traders. I am personally a trader. And so my job is to facilitate one, liquidity, right? So I'm there to help clients move in and out of positions. But then two, I have an overall balance sheet constraint that I am managing to hopefully manage it to a point that it is actually also making the firm money. Because at the end of the day, right, we're also making money besides just providing liquidity for our clients. Then you have salespeople, and the role of salespeople is so crucial to a lot of this, because as a trader, as a managing risk, obviously I need to be on the phone with clients and talking to them and to see, how can we help them out? But at the same time, it's great to have salespeople that can also develop those relationships with, the investors, so that I'm not constantly on the phone, that I can't be looking at my position at all times. So salespeople are there to be able to move the risk, whereas traders are assessing that risk and managing that risk. And then there's research and strategy, which is a great tool for clients when traders or salespeople, it might be something that might be out of their scope, or it might be something that they don't have a lot of time to go in depth. And these individuals are there to provide more information for clients across the board, from small money managers to credit unions, all the way up to big money managers like a BlackRock or Fidelity, right? All the way to like a big bank like even just Wells Fargo, who has their own portfolio that they have to manage. We can move on to the next slide. So obviously there's a variety of roles. So there's the research side, which is partitioned away from sales and trading, so they can have their own thoughts and be able to produce those outside of any influence from a trader or a salesperson or particular client. And sales and trading then for most firms is split up between equities and fixed income. I will say that I am a little bit more biased towards the fixed income side, since I am a mortgage trader. So that's why you can see there's some more line items under there. I don't know a lot about equities besides trading my own. But other than that, when it comes to fixed income, there's a variety of products from foreign exchange, corporate bonds, interest rates, commodities, structured products like asset-backed finance, which would be just like structured debt, which is what I trade. And then if we have any equity folks that want to answer questions, great. Or if you have any questions about equity stuff, I'm sure I can find some O4U alums that can help out on that front, but I'm definitely not the expert there. You can go to the next slide. So I think it's also important to discuss, like, what is it like to be an analyst? I think in investment banking, it's kind of clear what it's like to be an analyst. But I think anyone that has been in sales and trading for a long time would say that depending on the role you're in, depending on the firm you're at, and depending on the group of people that you're around, the role of the analyst is going to vary all over the place. And sales and trading, from my perspective, and I'll let the panelists speak to this later on, is very much a learn as you go type of business. It's not necessarily something that you can 100% learn how to do sitting in a classroom. And so from that perspective, the day-to-day varies a lot. So I'd say, like, the early sort of responsibilities would be, one, you're learning your product and you're learning the fundamentals, and hopefully you're generating some ideas or have questions around trades that are being put on, or questions around what clients, what they're doing, and how they're different. So for example, why does a money manager buy X, Y, and Z, but a bank won't, and why? So that's sort of where you're learning. And then I would say, another thing that's very interesting about the trading floor, if we ever really do get back to it, right, is that's a little bit different in the sense of I actually sit next to a managing director, and then behind me is the head of my desk. And that's very different compared to investment banking, from where most of the fact your VPs and higher might be in offices, door closed, depending on what firm you're on. Whereas on the sales and trading floor, especially a few years back, we actually used to even have our middle office right on the floor. So I could yell over and be like, hey, this trade doesn't look right. Can someone help me out? And so that's the difference, I would say, there, if you're trying to look for IB versus sales and trading, is that, one, it's definitely more fast paced. I am now, not right now, now I'm more yelling on the cell phone. But when I was in the office, we'd be doing trades, yelling at each other back and forth. And I would be saying, get them on the phone, like, I'm ready to be done here. Like, it's a very active market for a majority of the products. And then I would also say too, right, you're sitting next to managing directors and directors who are watching everything that you're doing. You're watching everything that they're doing. And back before COVID, you'd be sitting next to them, literally, like, very close, like arm's length away. So, I mean, my trading partner, I know everything about him. I know what's going on with all 4 of his kids. I know what's going on between him and his wife. I know when he's going to the dentist. I know everything, because we're literally sitting next to each other for, 10 to 12 hours. Now, not as much. Now I just kind of hear the kids screaming in the background when I call. But other than that, right, obviously the office is going to change, but that's a little bit different about sales and trading compared to IB, where if you're an analyst, you might only talk to the associate, and maybe sometimes you might talk to the VP. And the last thing I'll talk about is that, I don't necessarily think that sales and trading might be necessarily less strenuous. I probably should have worded that a little bit differently. But I will say the hours are a little bit different. Personally for me, I sort of start my day around like 6:30, usually done with our profit and loss calculations by like 5:30, 6, and I easily could be out of the office by 6. Are there some days where things go wrong and I'm there till 7:30 or 8? Sure. But the likelihood of that happening even once a week is very slim. That must mean that I'm I'm not efficient at my job, to be honest. So I would say when it comes to work-life balance, it's a little bit different. I don't do much work on the weekends, but now that I am work from home, I actually have been looking at the markets and diving deeper a little bit more so. Now I don't have to walk to the office. It's literally, my bedroom's like right over that way. So much easier. But I would say that is a little bit different from sales and trading, is that, it's not a 14, 16-hour day, 7 days a week type of thing. We definitely operate more so during market hours. And so I think what we'll do is I'll leave this like day in the life of an analyst up. And then I think we'll actually transition into questions here, because I'm sure some will come around this. So I do, Kevin, do we get any questions ahead of time by any chance?
Yeah, so I would say if anyone has any questions, please go to the Pathable page, and in the chat you can ask them. And that's the way that we'll communicate them. So I think we're
great, thanks.
Right now.
So the first question I want to ask, and this is to all the panelists, is what is your role within sales and trading? What does your general day-to-day look like? And why is it a good fit for you? Why did you decide to transition into this role or start in this role? And what have you enjoyed? And Erin, if you're good me putting you on the spot here, why don't you start?
Yeah, happy to. So I mentioned before, I'm in FX sales. That's foreign exchange as the asset class for people who aren't familiar with the lingo. And what I do specifically is I work with corporations and private equity firms who have exposures to foreign currencies, and I help them manage and hedge that risk through derivative contracts. So actually, while Britt was speaking, I was chatting with one of my private equity clients. They own an asset in the UK, and they increase their valuation of that asset. Now their LPs are dollar-based investors. So what I do is I design a derivative contract such that if the value of the British pound weakens versus the dollar, they get paid out more. And that's like a very sort of simple example of the types of stuff I'm doing on a daily basis. I really love it. It's a good fit for me. I studied macroeconomics in college. I went to Bowdoin College in Maine, and I like working with clients. I like following the markets. Part of my job is just understanding what's going on across the globe and coming up with a view for how that could impact currencies, and then understanding how that would affect my clients, and then figuring out ways to solve the problems. That's most of my days.
Great, thanks, Erin. Laura, why don't we jump over to you?
Yeah, of course. Hi, guys. So I mentioned I work in our prime brokerage division, which is a part of the bank that focuses on equity trading managers. We do have managers, I say managers, and use our lingo as if everyone knows what it means. We have underlying hedge fund clients who trade various products, but the most lucrative for the prime brokerage division is equities business. I'm the head of our separately managed account strategy within prime brokerage sales. So it's a sales role, but in having that headship, I manage certain people and processes to develop a good offering that we can sell to clients. And so I deal primarily with traditional hedge funds, and some of the biggest asset managers in the world would be our clients within prime brokerage. But my specific function also has an angle that looks at investors. And for every hedge fund, I know you guys are obviously learning about how banks work, always go back to the source of the money. Like that's always the starting point of every decision that's made in banking. And it's nice for us because it's therefore a meritocracy, but it does mean that you can always trace decision-making back to the starting point of capital. So I deal with a lot of very high net worth individuals and allocators who pull together capital and then pick talented hedge fund managers to manage that capital for them. And then I work on structuring solutions that make that really efficient for them and also efficient from a profit perspective for the bank. I studied economics, and so like it appeals to my my kind of financial mind to do that, but it's really a very social job, and a lot of what you do day to day can be learned and can be taught. I think the people skills probably are slightly harder to teach. You either are or you're not a people person. And in a sales role and in a bank, like some of the guys that Britt in particular alluded to, like you're with people all day, every day. Your network is much more than just within the bank, because you end up with all these clients, and all these clients have people they deal with, and you end up being connected with all sorts of people globally. It's a great role for me and I love it. And I particularly enjoy it because it's so global and because I am British. I was brought over with work to the US. It's like super mobile. And if you think of what we do, like everyone's connected and has been connected virtually for the last 6 months. And so dealing with our teams in Europe and in Asia are equally translatable as dealing with our colleagues in London. And so for me, there's a lot of social element, a lot of like really financial and numbers element, and then also like a global perspective that helps me travel with work a lot, which is useful for the fact that a lot of my friends and family still remain in London.
Awesome, thanks, Laura. Let me know if I also pronounce anyone's name incorrectly. Soma, did I pronounce that right? And then
Yeah,
could you
that's
go
perfect.
next?
That's fine. Hello, everyone. So as I mentioned before, I'm the vice president at Goldman Sachs, and I manage a team that deals with the income that Goldman gets on the back of futures trading, as well as the fees that we incur in the process as well. So that really honestly has it's broken up in a lot of different ways. Portions of my team are working with clients every single day, every minute for that matter, in setting up legal agreements with them in order to set the rules and responsibilities of trading, as well as the rates that are going to be incurred on the back of every one of those trades, things along those lines. And then I have portions of my team that are working a lot on like reconciliation. So we have millions of trades a day. We need to make sure that everything that we charge is correct and accurate and is what the client would expect. And so working a lot with clients, exchanges, other places on trying to like work out any kinks or problems or things along those lines as well. And then I have portions of my team that do like account management as well, of like, charging clients like interest and other fees in general. And so my team is a little bit more in that middle office type of space rather than sales and trading specifically. But obviously the wide majority of our work, we're constantly on the phone with traders, we're constantly on the phone with their clients, we're constantly on the phone with all these folks, trying to work out any problems that might come. Clients, I was literally on a call an hour ago, clients trying to do something different than we've ever had a client do before, right? So kind of brainstorming, working through what can we do for them? How can we work with X, Y, and Z parties in order to set up what they want the way they want it? And then one of the things that I find really rejuvenating for the team and like what we do is just around everything is really analytical in a lot of ways. And so we, really lean in on data a lot of, what are the trends. We have regular meetings with like the head of the business around, okay, well, we see that this product has been trading like X number amounts more than we used to see it before. If you opt into this type of like trading membership on this exchange, then you'll save Y amount of money. And being able to really help influence the business and the overall P&L of the firm. And so that's always, super challenging and fruitful in a lot of ways and new and different. I think for me, most of my day is on calls, honestly. From the morning, I work in Salt Lake City. And so we have around the sun model where you have people all across the world. And so my mornings are the busiest just because of where I am in the world. And so I'm, from the minute that I get online or wake up, I'm talking to folks in India and London and wherever, and kind of finishing up the day with New York, and sometimes Singapore if it goes all the way around. And then I would say the other thing that I really do and kind of treasure about my job, it might not be sales and trading specifically, but I'm the COO of the LGBT network at Goldman Sachs in Salt Lake City. And so I do a lot of work with the network there. And then I also work with some of the other networks too, including like co-pillar community engagement for our Black network as well. And so I think there's always like a little mix in there of different types of things too.
Thanks. Kaylee.
Right. So I work in structured equity financing. So essentially what we do is we make margin loans. So we make loans on the back of sometimes public equity, but also sometimes private assets, for example, hedge fund interest and private equity interest, for example. So it's very interesting in that the first half of my job is it almost feels closer to structuring or investment banking. It's very deal focused. We meet with the client, we see what their needs are, we come up with solutions and how we can get them the financing that they need. And it's a slower pace. A deal can go on from like 2 to 3 weeks, and essentially like it feels more like a slow burn. But afterwards, we do take possession over the collateral and we do have to monitor the risk. So it's an interesting transition into something a bit more market-based. For example, if I get possession over, say, Apple stock, then I'd have to monitor Apple for the life of the trade, which can be up to 2 to 3 years. So I do like my job, and that it's a very interesting hybrid, I think. It sits somewhere between trading, structuring, and almost investment banking. But yeah, it's an interesting role. A lot of my job is well, I do a lot of trade execution being an analyst. So I do have to take care of the book and hedge out, for example, interest rate risk, hedge out any delta risk that we may see. But a lot of my job is also just analyzing companies, reading through legal contracts, working with tech to make sure that as much as we can get automated, we are kind of trying to push for it, but still an ongoing process. But I think I like my job because mainly it's a hybrid role, and that's interesting to me at least.
Awesome. Thanks, Kayla. I appreciate that.
And we actually had a question come through.
Oh, awesome.
Yeah, I think it's pretty interesting. So question was, how did the sort of high and outsized volatility in the market over the last few months, it's sort of slowed down, but as COVID was hitting, impact your day-to-day work?
I can go. So it affected us dramatically, specifically. So we were seeing like 4 times the amount of trading volume, 5 times the amount of trading volume than we normally would have. And so one big focus was on, technology and technology working properly, right? It was working at a speed and at a intensity that it wasn't before. And so most of our projects, first of all, went on pause because all of our technology resourcing, as well as our operational and sales resourcing, all of our resourcing kind of went into that. And so that was one piece. Second piece is, clients are worried, right, about themselves, about the markets. And so you have to be a lot more sensitive around what's going on with them, what's going on in every single person's life. And I think the fact that it was aligned as well with COVID, like a lot of people were experiencing many things on a personal level too. And so it complicated the matter as well. I think our business is very much a people business, just as much as it is a numbers business or a trading business. And so always have to keep that in mind. And then the last thing that I would say on COVID-19 impacts and such is that at the time too, we were asking ourselves questions like, is our client going to default? And if the client defaults, right, or whatever happens, like at that point, that risk is on our firm. And so are we willing and ready to do that? And so it was a lot of analysis around the companies. How are they leveraged? Do they have enough liquidity? What is their process of trading in a way that we probably weren't before, where we trusted our clients and did that due diligence on a more periodic basis rather than on a daily basis.
Yeah, that's a good answer. I'd maybe add a couple of bits to that from the B of A side. So Bank of America is interesting in that it's got a very, very large retail franchise, which a couple of other groups that are being represented here today also have, but are probably lesser reported in the media. They tend to focus on like the big swings of the major hedge funds as being really dramatic and moving markets and things like that. But they don't really look at what the impact of a mass of smaller consumers does. So if you think like you and I, we all have money in a bank account. A lot of us have some form of investment account. A lot of our parents do, grandparents do. Like there's a huge amount of money dedicated to retail globally, like multiple trillions. And it far outweighs the impact of hedge funds when you actually look at it. And so from a Bank of America side, I just talked to the client base is split out a little bit wider than we would traditionally think. So I think like the hedge fund base you can look at as being like the really high frequency quick traders, which when the market volatility spikes occur, they tend to cause a lot higher volume of turnover, as you'd imagine. And so they're in and out of positions like all day, every day, intraday, intra-minute, just capitalizing on all these tiny different fluctuations in prices and trying to arbitrage those deals. They are very, very active, but they're also really reactive and able to delever very, very quickly. And so when they start to see volume spike, they also really reactively take down their leverage or put it back on, like they're just opportunistic in that way. So they can skew the footprint of like half of a trading business if they impact a lot of different desks. And so from our side, we see them as being almost like first movers in this situation. You watch what they do and you start to then play out how that impacts other groups. Next, I'd probably look more at the hedge fund groups that are more fundamental in nature. So they look at businesses as a whole. They look at like balance sheets and how that business is going to react to this. You often see that with the sector specialists, so groups that trade financials or healthcare. They're really hot topics and big themes during this crisis. And so they tend to move a little bit slower than the quantitative funds who just look at one piece of data that comes out versus another, and they tend to be a little bit more methodical in that. And so like from a bank side, you hope to have a mix of business between those type of groups. And then you go down the line in terms of reactivity to the retail group, retail cohort being you and I having normal money in normal markets. Traditionally, retail moves last because it takes us a bit of time to like incorporate data that comes through from the news and like understand what we're going to do, and then think, oh, maybe I should buy some Amazon shares, or maybe I should sell out of, you know, some of my market holdings that I've got. Traditionally, retail moves last and delevers last, but when it delevers, it's a really big signal for those other two groups to relever. So they then tend to see that as a big buying signal. In this crisis, retail didn't delever. Like they did a bit. There were kind of 8 consecutive days of selling in March and similar in April, but they didn't aggressively remove exposure like we've seen in prior crises, especially the global financial crisis. And our numbers show that in the global financial crisis, portfolios from retail investors reduced from around 55% equities holdings down to say 35-40% equity holdings. In this crisis, were coming into the crisis slightly more long equities, around 60%. They reduced to 55%. So there's a lot of selling power that still was built in, that these big hedge funds and quantitative funds saw as a sell signal that wasn't, saw as a buy signal that wasn't realized. So from a bank side, in addition to some of the great points that Salma made, like we're really trying to forecast what our clients are going to do based on information that is inherently imperfect. Like no one knows what's going on right now. If anyone tells you they do, they're just like, it's just the information isn't there. And so we're trying to use the traditional behaviors that we've learned to believe and trust in to forecast how risky our business and what could happen next is. So we create a lot of custom baskets and things like that that react to the increased volumes and volatility in the market.
Yeah, I mean, with COVID, I think I've aged 5 to 10 years. I mean, right. So working at Wells Fargo, the #1 mortgage lender in the country. I mean, when the market hit in March, mortgages just dropped. There wasn't anywhere to hide. And obviously the Fed has stepped in and mortgages have grinded all the way back and through, to be honest, where they were pre-COVID. But for me, only being in sales and trading for 3 years and now a trader for a year and a half, to sit on a book and watch all this happen and have to make decisions where you can't necessarily, because at that point too, we had just started splitting our group between 2 locations. So just in case someone did get COVID, et cetera. And so before we all went home, right? So not only am I not sitting next to my trading partner because both of us are split now, 2, we don't really have time to discuss what's going on because there's so much going on. You have REITs that are really too big to fail, selling billions. You have money managers not knowing what to do and either sitting there and just praying or being like, I just got to get out and reevaluate. And there was not a buyer to be found. And it was the first time that, you know, our trading desk, to be honest, is probably one of the most senior trading desks on the street, where if you combined all the ages of trading, we're probably close to like 100 to 120 years. And that's a lot, right? For 8 people. And so when I sat there and I would literally sprint to the bathroom and come back, and I would watch mortgages be 10 tighter and come back and they're 30 wider within a second, right? All of a sudden, mortgages already move fast, second most liquid product, right, in the world from the fixed income standpoint. To then have something like that move like that against you so fast, so hard, and it could be different the next hour. I mean, talk about stress, no sleep, not knowing if you're going to have a job. It was a lot. I would say I'm definitely grateful for my experience that I played lacrosse in college and I was a goalie. So risk is what I've been doing for a majority of my life. It was just different when I was on the field than now sitting in front of these screens. But I will say that was the one point where I was like, wow, I really just need to take all my fundamental knowledge, learn from these technicals, and just stick to my gut and, you know, be there for the clients that have always also been there for us, and make sure that you're there for them. But then at the same time, make sure that you don't get yourself sideways. And I think that's really, really important, and something I definitely learned through this entire crisis. I would say one thing that I really noticed too, I would say, like, we're human beings, right? And I think sometimes that can be forgotten in sales and trading because things are moving so fast and you're trying to make money. But I really want to go back to like what Soma said was like, we're human beings, right? There are other life things going on too. So, you know, I actually had a lot of conversations with clients where they were just crying on the phone to me just about just like life in general, not even talking about the fact that they were losing a lot of money. It was more so like, all this is going on. I don't know who to talk to, like, and those were the conversations I was having. So, you know, it's not just about the numbers, it's also about the relationships. And I think COVID has pushed our market even further in that route of, it's not just about understanding the fundamentals of your products, but if you cannot develop relationships with other individuals, it's very hard to be successful. Are there any other questions in the chat box, Kevin?
Yeah, we have a couple. One that I thought
Go
was
for
helpful was there's just so many different spaces and desks within the broad definition of sales and trading or global markets divisions. How do you actually figure out what is your fit within the firm? Like, how did you realize that you liked one different product or one different style? If you want to be a trader, want to work in execution, like how did you make that decision, and what were the types of things that were helpful in sort of leading your decision making?
Erin, I'll actually throw this to you and then to Kaylee, because you were talking earlier about how you sort of transitioned into this FX position. I think Kaylee, obviously you've recently made your decision on your group. So I think hearing from both of you would be great.
Sure. Yeah, so I started at Morgan Stanley as an analyst in investment banking. I came into the firm through the full-time recruiting program. I did not intern at a bank or in finance, and I didn't have a finance background when I started. So I didn't like fully know what I was getting myself into, but that said, I loved my 3 years in investment banking. They were like a really great sort of finance boot camp for me, especially coming from a liberal arts school. I figured out fairly early on though that when I pictured Wall Street, I'd kind of imagined being on a trading floor, and you know, I used to love to follow the market even before I started at Morgan Stanley. And so I think what really interested me was watching markets and understanding how information changed, how changing information would move markets. And so I kind of always knew, or I figured out pretty quickly that I wanted to move onto the trading floor at some point. And my specific role, being in FX sales, but like covering corporates and private equity, was like kind of the perfect blend of my banking background, where I was working with corporates and with financial sponsors in M&A, so now what I get to do is I basically get to like take that banking and M&A knowledge and I apply it in the derivative space. So a lot of my time is spent on these cross-border transactions. So I'm very involved in M&A deals that the firm works on still, but as a product specialist, again, as a derivative specialist, you know, helping these clients that are not necessarily markets experts, but helping them understand how they can use derivative contracts to hedge their exposure. So, and like I mentioned earlier, it's a great blend of my interest in macroeconomics. I think, look, I would just say to anyone listening and maybe not sure about where they want to end up within a bank, what's really awesome about a big bulge bracket firm like Morgan Stanley or some of the others that are represented here today is that there are so many different roles across divisions, but even within divisions. Like all of our desks are pretty different, I would say. And Morgan Stanley, at least, it's the only firm I've ever worked at, so I can only speak from this perspective, is I think the firm is really good at getting smart, motivated people in the door, and recognizes that, you know, as long as they do good work, the best way to retain people is to let them kind of move around and figure out the best spot for them. And I'm really grateful that I've had, the opportunity. I've sort of been on a few different teams since I've been at Morgan Stanley, but certainly the longest for the last 8 years I've been in our corporate and financial sponsor FX hedging desk.
I will say that I completely agree with Erin about the whole mobility on sales and trading. I think sales and trading is probably one of the most mobile divisions you can get into. Like, for example, I think in my entire analyst and associate class, there were 20 something of us in equities that started out with, and I think there are currently only 7 to 8 left. Everyone else, they are still in trading, but they moved on to a different product or a different region. Like, I think some went to London or Hong Kong, and others wanted to try credit or structured products, for example. So people kind of tend to move around during their careers. And I will say that the first division you pick and the first kind of products or clients that you cover may not necessarily be the ones that you do throughout your career. So really just try something new, and there's no harm in moving around. But I will say I got kind of lucky in that I didn't even really kind of know I wanted sales and trading. I did follow the markets. I did like the energy of it. I interned my sophomore year and my junior year on the trading floor in equity derivatives, and I loved it. I loved the whole energy, everyone moving around, things happening all the time. That was something that I was really drawn to. But I didn't exactly know what product I wanted to trade or what I wanted to really look at. And I just happened to meet my team, and we just happened to really click. So my team we're like 3 Asians, I think, and our boss is Greek. And all of us just work really well together. We have like kind of a synergy going on, and they're good at things that I'm not necessarily good at. I think I'm a bit more quantitative, and some of them are more qualitative or more client focused, for example. So we happen to complement our strengths really well. We happen to have the same interests, and we just really clicked. So I think that's what made my decision for me, really. It was more the team more so than the product. And don't get me wrong, I do love my product. It's a fascinating product, and one that has definitely seen some trouble in March. I think we had 2 clients default, and that was very interesting because I think it was the first default in 10 years we had. But yeah, I think I chose it more for the team than the product as it is.
May I add something?
Go for
sorry.
it. No, go for it.
So in case it resonates with any of you all listening, honestly, I don't care too much about the market, never have. It's not the reason why I'm personally there. And so for any of you that are kind of sitting there being like, I don't know what my passions are, like, I don't really have many passions in this world, to be honest. But at the end of the day, I think for me, I kind of ended up at Goldman on accident, long story, but why I've stayed and why I like my job and why I found where I am is a lot of, and how I try to manage my career is around, what kind of skills am I trying to learn and build on, right? And so if you don't have your passions to fall back on, maybe think about, well, what are you trying to get out of a career? What types of skills are you trying to learn? And then from there, look at teams, not necessarily based off of the topic of what they do, but based off of like what opportunities are you going to get, and what skills are you going to be able to hone and work on throughout that process. And picking your first team doesn't determine the rest of your life or the rest of your career. There are 100 different ways that I could have gone after my first year at Goldman. So at the end of the day, every move that I've made, I didn't know I was going to make it until the month before, and not because I'm a sporadic person. I'm actually a big planner, but just because, you keep an open mind, and as opportunities come along, you find the best opportunity for you in that moment at that time, and then you move forward. So just in case any of you all are, thinking like this is going to impact the rest of my life and this is the only thing and whatever else, like, go for something that's going to be right for you right now, and see where it goes.
I think all of that stems from asking questions. If you don't understand something, or someone uses an acronym or something like that, ask the question. Because at the end of the day, the more you can inform yourself about everything that's going on around you, the better off you're going to be, and the better you'll be able to assess. Like, do I want to go to this because of the people? Do I want to go to this from the product? Do I want to go to this because, 10 years from now, I might want to do X? And I think that is really important. I personally have actually traded every single structured product within ABF. So I've traded ABS, I've traded CLOs, I've traded CMBS. I've actually even sat on the syndicate desk for 6 months. And one of the reasons why is because when I first started, they literally noticed Britt asks a lot of questions. When she doesn't know something, she says she doesn't know it, and she wants to find out how to fix it or how to make it better. And due to that fact, they just kept moving me around to just fix all the problems. And that's what I did. I either filled in shoes for someone that was on leave for whatever reason, or I filled in because there was an issue on the desk and they needed help. And so I came in, I asked all these questions, and I created new processes, or I updated processes, or, you know, I just added an extra hand when they needed help. And now that has led me to be sitting on the largest book on the entire trading floor. And I would have never thought, if you had asked me the first day I stepped on, that I would want to sit with a bunch of like rowdy, like 40-plus-year-old white men all day long. That's definitely probably not what I would have said day one when I stepped on the trading floor. And now all these guys are like my best friend, and I'm like an aunt to all their kids. And so I would say, right, you never know where you're going to fall into. And it really comes from having those relationships and having those conversations, whether it's in the elevator, seeing someone in the hallway for the first time, or even if someone's staying late and you're like, hey, what are you working on? Do you have a sec to talk to me? All of those interactions, you'd be very surprised how much they can lend them to opportunities down the line.
Yeah, I think also there, like, don't feel like you're picking your life's future at this stage. Like, you're just developing your next set of goals at any time. Like, I still today, I'm now, 10.5 years into finance, I guess. I still have a calendar reminder every year that pops up on the day I started in the business saying, if you don't enjoy it, quit. Like, I never want to get stuck doing something that you hate forever. You just, like, why would you do it? I'm from a family of teachers. I never thought I'd find myself in finance. I was just really good with numbers and just kind of kept taking the next career move and career move. And it turns out that the big banks like different people. Like, they don't want what you imagine a banker looks like from watching films where they demonstrate what the trading floors in the 70s used to look like. Like, they want different people, and you can force your own specialization by kind of refusing to do what you don't want to do. Like, if it doesn't fit your skill set, then you take what you will from each job, be willing and open to move, make sure your managers know that. And I think there's a perception that it makes you look not committed. But I think if you have a senior enough sponsor, like, don't tell your own manager this every time, but get in with your manager's manager and tell them, like, I want a long career with the firm. I am so open to products, I'm open to region, like, move me around, but these are the skills I have and these are what I want to use day to day. And then, like, you guys know best, but just consider me in that. And I think, like, there's such a concern about picking the wrong thing that you almost, like, find yourself immobile to any kind of opportunities. And there's no real wrong answer in my experience. And to what Samuel was saying as well, like, the nature of a bank is, like, they represent their underlying, like, consumers. Like, there's so much difference there that everything that you can add through your networks and, like, being involved in the environmental networks and, like, the LGBT networks and things like that, like, you can always make your day be way more interesting than your core job looks on its own. Like, you build your own career, and I believe that, like, in all my experience, there's been a lot of opportunity when you ask for it.
Kevin,
Great.
Are there any other questions? I know we only have, less than 10 minutes?
Well, we had -4 minutes, actually.
Oh, okay. My bad, everyone. I went over. That's very classic for me. Anyone that knows me wouldn't be really surprised that I just can't stop talking and just keep going. So I guess I just want to say thank you, Kevin, for reaching out and helping me put together the presentation. And then thank you all the panelists for your time. I know it's a little crazy, all working from home and going through all this. So I personally appreciate all of you being able to get onto this Zoom call.
Great, really appreciate it, Britt. I think this was a fantastic session and hopefully helped people see that you don't need to know exactly what you want to do, but you should try and figure out what you like and what drives you and what you find interesting, and that'll allow you to have a long career like all of our fantastic panelists. All right, well, really appreciate it. And we'll talk later. Thanks all. Bye.